What's up, everyone? Back again, and today I'm just go over, hey, what's the 10 most common financial questions or money questions that's asked? And these are questions that I just pulled from Google, and let me just answer it for y'all. But before I get into this video, let me tell you, I'm not a financial advisor. Well, I'm not your financial advisor. I'm not your business consultant. Even though I do these things, does not mean that I am going to take responsibility for your choices. So before you go on that, please talk to a financial planner or a real estate or whoever you want to talk to about your money to make a better investment decision. So let's get into this. Number one, how to set a realistic budget. All right, let's put it like this. You need to allow 50% of your income for your necessary things. So you can break that 50% up to 20% into necessity, like your bills, light, and other things. And your house, right? So how much should you put on your house or budget for your house? I generally tell you to use that 50%. So if you take away that 50%, now you have another 50% left. So I pretty much put 20% into saving and 30% on wants. So pretty much that 50% should cover everything you want or everything you need to do for your basic cost of living. So your that 50% should have your electric, your water, your mortgage or your rent, and your car payment. And some people try to live a little bit above that, but try to keep it around 50%, because if you do 20% for your necessary or your savings and debt reduction, that will help you in the future. And then you can use your other 30% for your wants, like your travels or other things. Now, that's just my opinion. It's the 50-20-30 rule, and that's a realistic type of budget. And you can set your budget however you want, but realistically, you try the bigger percentage need to go to your four walls. Now, you can follow the Dave Ramsey rule, you can follow some of the other financial advisors, but generally I do the 50-20-30 rule just to make my life easier, and anyone could do this. So that's a more realistic budget. Some people like Dave Ramsey say only 25% of your income should go to your house. Well, that's started to become really unrealistic, because you either have to have a really big down payment or you have to get a really, really small house, and that will only accommodate you for like 2 or 3 years. Because as your family grows and you get a 3 bedroom or 2 bedroom, because that's what you could afford at the time, now if you have 1, 2 kids, guess what? You have to realistically make room for them. They can share a room, but let's say you had a third kid. Well, realistically, you're gonna have to upgrade your house, and at that time, you might not be able to afford it. So you have to think realistically before you purchase your house. So, and goes with your spouse. Hey, how many kids do you want? Oh, I want this many kids. Then you have to realistically budget for your house. It's okay if you go over that 25 and you do 30%. You just have to make sure you try to increase your earnings so you can afford the house. So you might have to sacrifice some other areas like your travel. So it's whatever you realistically want to budget for your life. The 50-20-30 rule is what I do, and it works out well for me. And I think, 30% for your wants is a very big want. If you make 100K and 30%, is 30,000 a year, what do you want for 30,000? I generally don't have that big of a want. So that's just realistically. Now, people won't stop calling me. There's so many scammers nowadays. It's so annoying. So number two, should I start investing? The quick answer is yes. You should start investing today. Undoubtedly, that's the question, is yes. Your return and helping people create wealth in the long run, it comes from, dividend earnings, various companies that give you a source of passive income. Now, if you think about it, what you should invest in, you need to pick a investment style that works for you. Some people do real estate, some people do the 401k, some people do businesses, but it's whatever that you want to do. You know, invest in the future, like your children education fund, you're buying real estate, and set life goals. Why are you saving? If you don't know why you're saving or you're investing, you're really not going to do anything with your life and not make it anywhere in your investing. So before you start investing, talk to someone. Say, hey, what type of lifestyle are you trying to plan for? People will openly say, hey, I want to live a more luxury lifestyle. I don't want to live paycheck to paycheck. I don't want to live off Social Security. And that should be your goal, not to live off Social Security, because it doesn't give you enough to live off of. And people use that as a saving method. Oh, I'm gonna just use Social Security and that's it. Well, that's not a realistic goal. So you should start investing now and pick the passive income source that you want, and talk to it and learn from people that's doing the investment and that are successful. Now that goes into number 3. What modes of investment should you do? Well, you need to discuss this with a financial advisor, financial planner, or you need to do your own research. Those are the 3 options. I do my own research because I tend to get better returns than my financial advisor and my financial planner that I used to have. And they are wanting me to talk to them about my financial goals and how I'm achieving it so they can replicate it. Does that make sense for me to talk to a financial planner whenever they're trying to replicate what I'm doing? And because then if more people do what I'm doing, then it could hurt my investments because they could figure out how to counter it. I don't know. I just don't talk to financial planners and all that stuff because my portfolio does better than theirs. So but I spend a tremendous amount of time researching each stock, investing, and going into these type of stuff. I take a tremendous amount of time to look at all my real estate, saying, hey, what is so good about this real estate? Why should I buy in this location, right? And that's an investment choice of mine. So I'll look at the power grid, and people don't look at the power grid. Well, I live in a hurricane area. What areas loses power the most? And people don't think about that. I did. So, but during that tornado event, none of my property besides one, which was in my warehouse, that lost power. And you know why it lost power? Because it's in an area where it loses power every single storm. So that's a common occurrence. So people don't look at that. Well, if it's my investment property, I need to look at every possible situation. Tornado, floods, hurricanes, and freezes, right? I have to look at all this stuff before I invest into a real estate. Some people just say, oh, just get a property, rent it out, and do these other things. But that's not the best way to invest in real estate. That's not the best way to do anything. Just like whenever I buy dividend stocks, I look at the companies. Do they have growth potential and all the other stuff? So you have to pick the mode you want to choose for your investment. Now, I'm a little bit different. I kind of go through all these steps and I made my own rules and stuff before I purchase some of these houses. So is it okay that I do it like this? Well, it's my money, so no one can really tell me. But before I bought my investment house, I looked at all those stuff. So did a normal real estate agent know this? No. Does normal real estate people know the power grid? No. I'm just lucky that I pay attention to trends. I keep track of this stuff because I invest in the local area. I don't invest in some random Joe Schmo area in Montana because it's cheaper. I don't invest all the way across the country because then I can't see my property. I don't invest in anything that I cannot go visit myself. And since I don't have a private jet, guess what? I invest in the local area. It makes sense for me. Now, number 4, should I have a financial planner? The short answer to this is yes. You should have a financial planner if you do not know what you're doing. Now, I have a tax strategist person, I have a bookkeeper, I have lawyers. So I have these things for my financial benefit, but it costs money, right? But why I have people to assist me in my legal and financial journey. Now, should you have a financial planner? That's up to you on how much you want to research and study on the market. It takes a tremendous amount of time on the market to make money properly and invest in the long term. And if you keep thinking about short term, mid term, and long term, you should talk to your financial planner, because when I was helping someone with their portfolio, they got mad at me because they didn't make $1 million in 1 year from their trading style. And I told them I didn't approve of their trading style because I don't do shorts, I don't do puts, I don't do day trading, because I lost money in day trading because it was too much work to do day trading, because day trading, you have to monitor it all day. Well, if you're a busy business person, or someone that doesn't sit on their phone all day, you really can't do day trading because it's not a proper avenue of income if you're trying to make money off of it and you can't pay attention to it all day. So, yes, you should have a financial planner if you don't plan on doing your own research on your financial goals. Like, I don't know how much money it takes for $1 million in 20 years. Well, you talk to a financial planner and they can help you plan this out. That's how it works. Now, you have to be realistic with your goal so they can help you get to that plan. So, number 5 is, when and how much should I save for retirement? Well, that depends on what type of lifestyle you want to live. That's pretty simple. People say use all these different percentage rules, but how do you want to retire? It's the big question. If you get $1 million, you get about 40 grand a year. If you get 2 million, you get about 80 grand a year. That's the math that works out. And so, without touching your nest egg. So if you want to live off 120,000 because you don't have everything paid off, well, guess what that is? 3 million a year. That's just a rough number. Don't quote me on these numbers, but if you have 3 million a year, or you have 3 million in your investment, guess what's going to happen? You're going to end up getting about 120,000 without touching your nest egg. And that's if you separate it and make sure you take all these safe avenues, but that's up to y'all. And I can't do nothing about it. 3 million is a lot of money to save. And how long does it take to save for it? How long will that 3 million last if you want $120,000 a year? These are the questions you need to figure out, because how long do you expect to live? If you're 30 and you expect to live till 100, well, realistically, 3-4 million might not be enough because of inflation. Someone gets hurt, because a lot of things can happen in that time. If you have 3 million, you're trying to live off 120,000, and you live for 3-4 years, yeah, it's 100% gonna work. That's just ignorant if you don't think it's gonna work. But you have to remember, what are you saving for? You're saving for yourself in retirement, and not really to worry about what you're going to pass on to your kids, because at the end of the day, it's your retirement. And if they're not helping you to save for your retirement, then don't worry about what you're going to pass on to your children. Don't worry what you can pass on to your family, because at the end of the day, when you passed away, you can't take your money with you. So you don't have to work so hard that you save $20 million and you can only live off of $40,000 a year. It makes no sense. But make sure you save them enough for retirement so you can live a very comfortable retirement. That's the whole goal about saving a retirement account. Now, number 6, how much is emergency fund is sufficient? Now, everyone says a different number. I say 6 months. Whatever your 6 months worth of income is, or 6 months of expenses, that's your emergency fund. That's the easiest way to put it, but it all counts on your situation. do you have an income that won't go away, right? If you have a if you're on disability and it's not going away unless you go to jail or federal prison, then yes, don't you don't have to have as much in your emergency fund. But most financial advisors says 3 to 6 months worth of living, and that's what I go with too. All depends on your age, your lifestyle, and your financial circumstance. But that's the truth of the matter is it all depends on you. Now, number 7 is how to pay off debt. There's the snowball method. There's the avalanche method. That's up to you. Um, Whatever you can do to pay off your debt faster. Um, Number 8, what if I lose my job? What do you do? Well, you can file for unemployment, but what are you going to do necessarily? Well, if you don't have um your emergency fund, you're kind of screwed. If you don't have everything set up for it, just in case, because no one is safe in their job unless you own your own business, and then you're still not safe because what are you going to do with a downturn in your business? So just because you are thinking you're unfireable at your job or XYZ, what if you lose your job? Because they can find someone to replace you. You know, they're quick to replace people whenever they start acting up. That's just how life is in business. I got fired and never been fired before. And that's a whole different other story. But did I worry about it? No. But at the end of the day is everyone can lose their job. Anything can happen. You know, I lost my job. My business was when I came back to look at it, it was doing terrible because of a piss poor management. And that was my fault. So I have to fix it, right? So let's move on. Number 9, what should I do to improve my credit rating? Pay off your debt. That's all you can really do. Pay off your debt and reduce your utilization of credit score. That's all you can do. And number 10 is how frequent should I monitor my portfolio? I say at least once a year, talk to a financial planner or look at your investment and see what's not performing, because you can use the get rid of the stocks that aren't performing as well and get stocks that are performing better. But reality, I look at mine about once a month, and that's because I'm more of an avid investor, and doesn't mean I don't look at stocks. I look at my performance of my portfolio about once a month, but I look at stocks almost all the time because I'm looking for something to invest in. And that's just the reality of it. Now, just to conclude this, under all these circumstances, one must be adapt to money management skills. All this comes down to how are you going to manage your money? And this is up to you. And that's all I got for y'all. And please like and subscribe, and please enjoy the video.